Hello, everybody. Thank you for your attendance. I'm Rick Ranjan. Welcome to the Adansonia Capital Global Opportunities Portfolio Update for November 2022. Our disclaimer, please read it at your leisure. I'll take it as read. So look, due to unforeseen circumstances, we didn't do an update for October. So I'll start this presentation by backtracking a little bit. So the quarterlies for the portfolio are found on our website, www.adansonia.com.au, under the Reports tab. So for the September 22 March quarter, the portfolio actually performed strongly in a falling market, delivering plus 1.4% versus the index, the MSCI World Index, down 2.5%. This outperformance was largely due to stock selection and also the fact that we were carrying around 16% cash as at the end of the month in a falling market. At the same time, we entered the period with 11 stocks. So turning to October 22, the portfolio actually underperformed a strongly rising market. The market in October rallied strongly, perversely actually, on bad economic news on the hope it would temper both the magnitude and the rate of interest rate hikes by central banks. We underperformed, as I mentioned before, because we were carrying a fair amount of cash in a strongly rising market. However, those cash levels have now been reduced from around 16% to 6% with the addition of two new stocks in the portfolio, Boeing and Uber. And also, the underperformance was also due to the fact there was some very strongly oversold, deeply cyclical stocks in the market, which rebounded very strongly over the last month. As I mentioned before, and as you know, the portfolio is available on Chartreuse MDA. Again, we are open to discussing the portfolio, its contents, and our views anytime. Just please feel free to call us whenever you wish. So, stock of the month is Amazon, Amazon.com. We have this in our portfolio. We reduced it a few months back, but it's still a holding. As you would all know, Amazon is a leading internet retailer by size and scale, and it continues to grow market share as there's a general swing away from bricks and mortar retailing. On top of that as well, Amazon is a leading provider of internet services, along with Microsoft, which we spoke about before, actually up at the Cairns conference. And it's one of two companies that can provide cloud computing at scale. It's also leveraged, just like Microsoft, to structural growth in cloud computing, which is estimated to grow at around 15% per annum over the next 6 years. On top of retailing, Amazon basically is enjoying strong growth and strong margin growth through AWS, which is its cloud computing arm, and also advertising. Furthermore, Amazon has a loyalty program as such through Amazon Prime, where it attracts and retains customers by offering exclusive video content and also same-day delivery. So it basically draws people that are large Amazon users to basically subscribe to Prime. In saying all of that, while the company is enjoying good structural tailwinds, it's experiencing some headwinds at the moment, and 2002 has been a tumultuous year. Amazon is not has not basically avoided macro headwinds around obviously inflation and interest rate hikes, and further to that too, a very decent demand fillip that was pulled forward through the pandemic is now missing, and it's basically impacting demand for its services in 2022. Amazon is a company that basically invests very strongly for future growth, and it did so as well through the pandemic. And now essentially what's happening with this lull in 2022, it is suffering from overbuild and basically underutilized capacity. And that's impacting on costs and profitability. In saying that, we see that a lot of these issues for Amazon are not structural, they're transitory, and obviously we have a 5-year investment horizon. And essentially, what we will see is that profit in Amazon will be restored through, firstly, a very meaningful cost-cutting program that they're going through, and also that they will now start to grow into this overbuild, which I was talking about before. So as earnings start to recover, demand starts to recover, they already have essentially the infrastructure built, and they'll be increasing the utilization of that infrastructure, which will basically then obviously help drive down costs and better improve margins of the retail business. Further to that too, Amazon also invests around $10 to $15 billion a year in projects that are unprofitable. Ones which come to note straight off Alexa, healthcare, and also that they have a very meaningful stake in Rivian, the electric car company, which has been a very meaningful drag on profit. And essentially, management has turned around and said they're going to be viewing the allocation of resources to these unprofitable projects, where essentially, even if it's a 10% cut in spend on a $10 to $15 a year, $10 to $15 billion a year burn rate, it will have a meaningful impact on earnings. The stock, in my view, is cheap. It's trading at around 10 times 2023 EV/EBITDA, which historically is a very, very low multiple. And this stock has actually been savaged by the market. It is down year to date. It is down over 40% on issues which I mentioned before in 2020, which are not structural. As a consequence of this, with our outlook, we're very happy with our holding, albeit that it has been reduced a little bit. But with a valuation of $140 a share US, which includes the current weakness that we're experiencing, there's around 50% upside to this stock. So as I said, our portfolio invests on a 5-year horizon. It is a portfolio that has a lower turnover rate, and we like companies that have the ability to generate growth, in excess of that, in excess of the revenue growth, in excess of global nominal GDP. And this is definitely the case with this company, although at the moment in the near term, costs have been basically higher than expected. So we're very happy with this company and believe that it will be a profitable investment for our clients in the medium to longer term. Anyway, that's the conclusion of the presentation. As always, our contact details are on the front. Myself and Tony's phone numbers and email addresses. Please feel free to contact us. Those which are investing with us, we continue to thank you for your support. And I will speak to you all in a few more weeks to wrap up the year, calendar 22. Okay. Thank you very much.